welcome to S&P Global Energy Red Thread. I'm Yorgos Vitis, head of the Agriculture Costs and Margins team, and joining me is Desiree Sigaudo, our expert in agricultural economics. Hello Desiree, how are you today?
Very well, Yorgos. How are you?
Doing great, thank you. Today we'll dive into the latest outlook for wheat production systems in key producing EU countries, focusing on cost structures, market dynamics, profitability, and also the drivers behind prices and yields through 2035-36. Let's get started with the cost structures for wheat. According to data from the Agriculture Costs and Margins platform, variable expenses are said to make around a third of total costs over the next decade in key producing countries like France, Germany, Poland, and Romania. Desiree, can you walk us through what is behind these variable expenses, and also why do we see such differences in the cost structures between countries like France and Romania, for example?
Sure. So before diving in, I would like to point out that what the model takes as variable expenses here are the main four items for wheat production in this case, that are fertilizers, agrochemicals, seeds, and fuels. So from these four, fertilizers and agrochemicals account for over 70% of the total. And let me highlight also that if we take fertilizers alone, they account for over 40% of total variable costs in the wheat production. And not surprisingly, it's fertilizers, the main item, who is expected to drive the increase of variable costs in the forecasted period that we have. This forecast is also taking into account the CBAM effect. So since in its implementation in early 2026, and actually before that, because of the expectations of being implemented, there has been quite high uncertainty in the fertilizers market, and that was priced in the different nutrients. There was some stockpilings and some trade disruptions that affected the fertilizers market. Now to the second part of your question, when we talk about the differences between the different countries, the different producer countries across the EU, we see significant variations. Let's look at the data here. So first of all, we have France with quite high variable costs that in 2025-26, they were about $770 per hectare. Then we have Germany and Poland at around 700, still quite high, especially if we compare these costs with Romania, which we see way below these levels at $400 per hectare. That is almost half the variable costs in France. And here again, fertilizers are the main explanation behind these quite big differences between producers.
Thank you for that, Desiree. Let's move on to prices and yields, which are crucial for revenue creation and also profitability. Our cost and margins platform suggests recent volatility, everything from weather events to geopolitics. So could you summarize what has been driving the recent movements that we have been seeing in wheat yields and prices, and also talk a little bit about how we should expect these factors to play out over the next few seasons?
So one of the most significant geopolitical factors that's been affecting the wheat market since 2021-22 has been, of course, the Russia-Ukraine war that started in February 2022. So this has brought a lot of logistic disruption in the whole area of the Black Sea that not only affected wheat, but it affected a lot of commodities. But in the wheat market, we are actually talking about Russia and Ukraine, which are two leading wheat producers and exporters. And the market has been pricing this increase in risk in this area. Now, a second factor could be weather, and actually more recently in the 2024-2025 season, we've seen two very different weather patterns across Europe. So On one hand, we had severe droughts in France and in Germany that downgraded the quality of particularly the high protein wheat in these countries. But at the same time, we've seen favorable weather conditions in Eastern Europe that boosted the harvests there, that were able to offset the negative effect that weather had in France and Germany. So we can see there how different weather patterns can coexist and play on both yields and prices in a region. And looking at the present situation at a bit ahead of us, in 2025, 2026, very good results, productive results are expected in the EU, with winter wheat already successfully planted and developing positively in this first months. And this is going to happen in a context of also good expectations in terms of global supply of wheat. We've seen good results in the southern hemisphere with Australia and Argentina with good harvests. And not only is expected for the EU to have good production this year, but also Canada and Russia in the northern hemisphere.
Profitability is, of course, the bottom line for growers, and our analysis suggests that gross margins will vary greatly across countries of the bloc. Interestingly, we see specific countries surpassing others over the next few years. So where do we see this divergence coming from, Desiree? And also, what should we expect to see from the movements of gross margins over the forecast period?
So for gross margins, the model is anticipating an average across the EU of $690 per hectare. From there, we have quite a spread between the different producers. So we have Germany on the top with quite higher gross margins compared to the European average. And then we have Poland quite below that average. But then we have France and Romania that are both pretty close to that average. And I would like to highlight the situation of France in particular, which of course is this traditional and key producer of wheat in the EU. So we see France currently very close to the European average, but we've also see that the rising costs in France are likely to continue putting a pressure on the gross margins in this country, going into a negative trend that will actually, as we can see in this chart, will actually end up on a change of situations. So from 2028-29 onwards, Romania is actually expected to surpass France and even the EU average due to its cost advantage. So going back to your question, yes, we are expecting an important change in the order of these key European producers in terms of gross margins.
Well, thanks a lot for that, Desiree. Now, switching from a gross basis to a net basis, from a net margin perspective, we see that many countries remain in the red, especially once we include own factor costs, things like depreciation, the opportunity cost of unpaid family labor, and also the own capital expenses. Once we exclude these from the equation, the outlook obviously improves. Can you break down how much of a difference does this make, Desiree, and also how we should expect net margins to evolve over the next few years?
Yeah, absolutely. And that is super interesting to see and to measure how the model is expecting for net margins and net margins before own factors to behave over the next decades. And for these, we are basically analyzing these two variables for each of our selected top producers in the EU. Looking again at the data here, first we have France with both margins moving into a negative trend in the future. We are expecting to see net margins fall below the minus $1,300 per hectare by the end of the forecast period. And that is a big difference when we compare it with the net margins before own factors that will also fall, of course, but up to minus $600 per hectare. Secondly, we have Germany and Poland with a very similar negative trajectory, but in this case it's worth noticing that own factors actually have an even greater weight in these countries, because the difference between net margins and net margins before own factors is bigger in this case. And finally, we have Romania, that is the best positioned country of our group. Net margins in Romania are expected to become negative only by 2030, and that is a big contrast with the others. And net margins before own labor and own capital and depreciation are actually expected to remain positive throughout the forecasted period. So in Romania, we see that the difference between net margins and net margins before own factors is much, much smaller. And this analysis actually highlights up to what point own factors can absorb part of the profitability in the wheat production business.
Thanks, Desiree, for walking us through these insights. For more information and analysis, visit S&P Global Agriculture Cost and Margins portal. Thanks for listening.